Could Tesla's stock fall below $100 in 2023? It's already fallen significantly in 2022 at a price per share of $124 as of this recording. It's not that far away. So let's look at a few important metrics to determine if Tesla's stock could fall below $100 in 2023. The first thing I'm going to look at here is quarterly revenue growth, and Tesla has shown very nice revenue growth over the years. We see going all the way back to 2014, but the majority of its growth has came after 2018. It's kind of exploded, but investors should not expect this kind of growth to go forward for the next few years. Competition is ramping up, and customers now have a choice when they want to buy an EV. It's not Tesla's not the only game in town. The next thing I have pulled up here is Tesla's total assets and total liabilities, because I wanted to highlight, like, yes, Tesla is making more sales, but at the same time it's significantly ramped up its asset base, right? It's built up more manufacturing facilities, it's built up more cash on its balance sheet, more debt on the balance sheet. You see here $33 billion of total liabilities. That's another word for debt there, and $74 billion in total assets. So yeah, the revenue has soared since 2018, but so has the assets, right? Assets have more than doubled since 2018 as well. So that's something to keep in mind, because as an investor, you want a company that's good at generating a return on these assets. You don't just want to see revenue growing, you also want to see revenue growing from an existing asset base, not revenue growing while assets are growing. Of course, revenue is going to grow if you add another manufacturing facility, right? You're going to produce more cars, you're going to sell those cars, that's going to cause revenue to grow. But how much does revenue grow in relation to those increase in assets is what's important. The next thing I have here is Tesla's cash flow from operations, and it's done a really good job again since 2018 in boosting its cash flow from operations. It was close to break even or negative from 2014 to around 2018, 2019, I would say. And then only recently has it comfortably been generating positive cash flow from operations, giving it a healthy cushion above break even, and it hasn't generated a negative cash flow from operations in several quarters now. Another thing I want to look at is Tesla's shareholder dilution. It's been issuing a lot of shares, again, from going back to 2014 when it had around 1.8 billion shares outstanding. It now had, as of its most recent update, 3.46 billion shares outstanding. Why are shares outstanding important? Because with more shares outstanding, existing earnings need to be split among more shares. So if you're going to previously get $1 earnings per share with the 1.8 billion shares outstanding figure, that might, all things being equal, that would fall to 50 cents earnings per share with 3.5 billion shares outstanding. So as shares increase, you're splitting profits with more shareholders. This is something that existing shareholders do not like to see, because you want to have more of the profits for yourself. You don't want to be splitting these profits among more shareholders. And finally, to determine if Tesla stock price could fall below 100 in 2023, I want to look at its valuation. Is it getting to a level that's really, really cheap and so limits the downside? And I'm looking at Tesla's price to free cash flow of 48 and a price to earnings of 38. And while they are both down significantly off their highs as the stock price has decreased, they're not especially cheap, right? A price to free cash flow of 48 is not cheap. A price to earnings of 38 is not cheap. It's only cheap if you expect the company's earnings to grow substantially over the next several years. And that way you can say, okay, this is cheap because earnings are going to grow so much and free cash flows are going to grow so much. But that's not certain with Tesla stock right now. That's not certain. It's facing macroeconomic headwinds. The risks of a recession are rising, competition is increasing, interest rates are going up. All of these are not good news for Tesla's business in the near to medium term. So you can't say that you're optimistic about earnings and free cash flow going forward the next 6 to 8 quarters. At least I can't say that, right? So to answer the question, could Tesla's stock fall below $100 in 2023? I think so. I think there is a chance it could fall below $100 in 2023. It's only about 20% away from that level. The stock has come down already more than 50% off its highs, and so I think it could go even lower. All the macroeconomic headwinds and the bad news surrounding the stock, competition, all of that could bring the stock down in 2023. All right, that's all I've got for this video. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.